Good morning, traders. It is Wednesday, September the 18th. Taking a look at the charts, not a whole lot has changed over the last couple of sessions. We're letting the markets kind of get their stride here or kind of build a range, whether they're metals and safe havens, trying to build a support base before potentially going higher. In the equities markets, testing those highs from back in July and trying to figure out if they're going to break out to the upside to new highs or reverse back down and collapse and test the August lows. So let's just take a look at the charts. Today we got the Fed coming out, going to be probably some pretty wild intraday price action whenever they speak. We always see some wild market moves, but overall this is the SP 500 30-minute chart here on the left-hand side. We've been in a downtrend, and then the trend reversed, and we've come all the way up, and we continue to see it move higher. Now overall, it's got a little bit of what looks and feels like a bear flag. We could see this move back down and sell off. If we do see the market drop to a certain level around this green hashtag right here, then we could be into an oversold territory. It looks like it would be roughly a measured move if we were to do a Fibonacci extension. It would put us into somewhat of an oversold territory, a nice three-wave correction, and we'd see if we could get into another level here where it could move higher. Now overall, this type of price action right here, where we've seen the market rally up and pull back and rally up and pull back, it's getting into this type of price action here. And we saw it again, it goes back on the chart a little bit further, but we're into this type of price action where we're going to start to see it really kind of grind and likely chop around. And what happens after that is usually some type of big bout of selling. So we're kind of letting the market do its thing. I wouldn't be surprised if the big money allows the market to squeeze up to break to nominal new highs, get all the investors around the globe all excited again. Markets hitting new highs, people will dump more money in, and then that's where the big institutions come in and sell into those people. And we see that happen here, and then we hit new highs again. Everyone got sucked in, and distribution selling kicked in, and it happens repeatedly until eventually the big money decides to just keep selling off. They're not taking any more risk, and then we start to go into major downtrend, which would be a bear market. So overall, market still in an uptrend. We got green bars here. Let's go look at the other asset classes like bonds. Bonds been selling off. They went and topped out, rolled over, and they're still in a downtrend. Now they've had a nice rebound in price. If you look at the daily chart, they've had a nice rebound. They got oversold, but really these are inside bars. These are still considered bearish. And if you look over here, this red moving average, this is the 5-day moving average on this chart here, and more or less we are stuck underneath that level, and that's usually a point where we could see the market sell off again. So inside bars mean we've got a big down day, and then we've seen these up days. They're all just within one day, and we could very easily see a big red bar to the downside and potentially see it continue to sell off and flush down even lower. So it'll be interesting where the markets move after the Fed today. I mean, I don't trade on news. Crude oil news, huge move in crude. So many people think you should be able to catch these moves, but you can't trade news. Just because there's a big move doesn't mean it can be traded or caught and profited from. Very high risk. News is completely random. You never know when it's going to hit. And the Fed will be the same thing today. We don't know what's coming out, and it's going to move the market. And just because there's big moves, don't think you should be trading them or should have profited from them. That's just not the way trading works. Overall, we're letting the safe havens, think of bonds more or less the same as metals. We're looking for some type of bottoming formation, some type of choppiness in the market where it starts to build some type of base, and eventually when it breaks out of this range in either direction, it'll either be a base and we can get to a new uptrend, or we start to see a breakdown and we could see this extend to the downside. If we go look at gold, you can see how that base is starting to form here. It still has a very bearish tone to it, very strong selling. If you look at the bodies, we've got very much so a bear flag. It has had some pretty big whipsaw price action in here, but overall it is still in a downtrend. Actually, it just turned orange there yesterday, so it is starting to turn to the upside. If we look at the price action, you can see it's trying to build this base a lot like what I think bonds are trying to do. The safe havens are trying to carve out a bottom. If this starts to move up a little higher and starts to break above these, we're going to actually get into an uptrend, and we could see metals start to go higher. But at this point, it is still under this previous pivot high on the chart here. And this is the shorter term range right here. We'll see where it goes today. Today's going to be big, wild action, I would think, and we'll just see how things shake out. And from there, we can recalibrate and see if we want to get back into metals or a different safe haven play. So let's take a look over at silver. Silver has been in an uptrend, flipped to orange. It is actually just turning towards a downtrend bias. Again, we got inside days here for silver. Big down bar, a couple up days. This still points to lower prices for silver at this point, but it is trying to build a base. You could argue there's a base starting to form somewhere through here, and we just got to let the market do its thing, and we got to see the momentum come down, shift, and rotate to the upside. If we look over at gold miners, we've had a couple really strong days. Obviously, it's had several strong days to the downside. The bigger the move down, the stronger the rebound will be as well. So it's all in line with the recent price action. We've got some pretty wild whipsaws. More or less, we're seeing metals or miners are trading in this very big range. We could easily see this chop around and build some type of big base. It is starting to flatline the 20-day moving average. It could be starting to on the verge of moving higher. But again, it looks like we got a lot of whipsaw action. When we get big gaps in price and sell-offs, and then big gaps from there to the open and big runs, we're going to get into some pretty wild mixed signals in the market as it tries to build a base. And we'll be looking to get long when the next setup occurs. Taking a look over at natural gas up again today. It's squeezing between the 200-day moving average, the 5-day moving average. It ended up hitting several different resistance levels. We got to this one here, which is where we exited our play. We were waiting for some type of waiting for a pullback. Instead, it continued to explode higher, broke through this next level, and now it's squeezing up into this pattern. At this point, it's still a very high momentum play. It's still holding up really well, and it could very easily continue to go higher, but we're not chasing something that has run this far. We caught the nice section, the middle section here. We caught this first move into resistance, and it was still technically in a long-term downtrend, so we wanted to make sure we locked in our gains because it could have very easily sold back off and gone down to new lows. It's been doing that for a couple years, and the bigger trend was in play, which is why we just wanted to get in, catch this first impulse move, and now we're waiting for it to have some type of larger correction for us to potentially get long again for a move up into the 3+ zone going forward. Looking over at crude, big pop on news. Obviously, we saw that huge pop, and now yesterday gave back a good chunk of those gains. Today, it's continuing to slide down another 1.75%. And as we know, news is usually a pop, a blip on the chart, and that's what it's been at this point. We had a pop, a blip, and usually it fades back down to at least half of the move, in most cases all of it. So if you look at this whole move here, this is visually roughly just the halfway point. So it's more or less given back half, and now we'll just see if it continues to fade down and sell back down eventually to the lower end of this range going forward. Anyways, that's really it for this morning. Actually, let's just pull up utilities real quick. Utilities holding up really well still. They have a nice bullish formation. Depending what the Fed does, we're probably going to see a significant move. The question is which way, and we are somewhat set up into something kind of like this type of price action. We have this little pennant formation, whichever way it breaks. If it breaks to the downside, we'll get stopped out. We do have a stop somewhere right down around here. So if it does sell off, we'll end up getting stopped out with break even on that portion. We did take our first profit position somewhere up in here. But if the news is favorable today, we're going to see this trend continue to hold up and continue to take off towards our next target zone. You can see here, this is where we got in, this oversold territory, and we got up and we took some gains off, and now it's consolidating within this pattern. Hopefully we'll start to see a breakout and for it to take off to some new highs. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.